All right, good morning, everybody. Consumer confidence 82.3 versus 83.2. By the way, on that, consumer confidence is one of those interesting things in that it doesn't really necessarily mean anything, but for some reason, the market likes to trade on it. So the consumer confidence survey, they literally walk into the street, find a bunch of strangers and ask them how they're feeling inside. How's everybody doing? And I'm being completely serious about that. They literally go and interview people on the street and say, well, how are you feeling about the economy? On a scale of 1 to 17, how are you feeling? And they go, well, I bought a pair of shoes the other day and they cost me a little bit more than I expected, and gas is expensive at the pump. But I'm feeling pretty good. I got a Coach bag and it made me happy inside. So I guess I'm about an 83. Complete mixed bag. And literally, that's how the survey is conducted. Very scientific. Yet here we stand. That's one of the more important numbers. All right. So we'll move on from that. So as always, please, questions are always welcome. Probably have a shorter than usual presentation for you today. So it'll give us an opportunity to look at some charts. Last month, I know it was a long time ago, but I have a hard time remembering what I had for breakfast yesterday, but we talked about a few trade ideas, principally euro-yen coming off 143, which it did quite well, and then we talked about a couple of euro shorts, which we're still basically waiting on, and some euro-Aussie stuff, if the memory serves me correctly. Hope you made a little bit of money on those. All right, so I want to preface this by saying that this has been a fairly tough market, I would say. What about you guys? In that volatility is still very, very, very low, very low. I mean, euro has been hanging around. This looks like a big move on the euro. We talk about 50 pips. Right. Volatility is incredibly low. So that makes life pretty difficult. Here, I'll demonstrate it to you. Try to give you some context on this. I can handle bullish markets. I can handle bearish markets. It's sideways markets that get miserable. And obviously there's other stuff, right? One's not married to the euro necessarily, but the euro is the highest trade currency, blah, blah, blah. So and I've been concentrating on things like the S&P and a little bit of silver and some stuff to try and make up for it. But here you go. This is euro over the last 52 weeks, and that is not an uptrending volatility graph, is it? It would be a downtrend by most accounts. And this is pertinent to our discussion today. All right. So our discussion today is on pivot points, and a lot of you have heard this pivot point spiel quite a lot. And if there's some redundant stuff, I apologize. But if there's some new stuff, great. Okay, so let's have a conversation here. So pivot points initially came out when any reason for the low volatility. I think it's, Mike, and this is conjecture on my part, but I think it's to do with time horizon and people diversifying out of the dollar. I think that the dollar confidence in the dollar is rubbish right now. I mean, you can't print 4 trillion of these things and expect people to think that the dollar is just the bee's knees and cat's whiskers. And then on the other hand, you have Draghi coming out and saying, well, QE and negative rates is probably upon us, but it's not upon us. It'll be, it'll come about when it comes about, but it's not soon. It's such wishy-washy rhetoric. We don't know, do we really, from the United States standpoint, do we really know the time horizon for a complete withdrawal of QE? We can if we project sort of the 10 billion moving forward. Do we necessarily know when inflation's going to hit and they're going to look to raise rates? Well, Grandma slipped and told us more or less, but she subsequently backtracked on that too. So the time horizon for central banking and monetary policy change is blurry. And I think although there's signs of deflation in the euro, we're getting a spattering of euro positive news at times, right? Those of you that trade the European session will notice that we're getting all kinds of very poor French data and very, you'll get stuff out of Sweden where you're like, goodness me, that is just awful. And then all of a sudden, Germany will come out with good manufacturing news. They'll beat PMI. Now, how is that possible? Right? But it's not enough. I guess what I'm saying is okay, the CPI was off today, but there's not enough just rank negative news. There always seems to be a spattering of decent stuff. And I think that is sort of the issue, is that we don't have consistently poor data coming out of Europe, particularly Germany. So at the moment, it's weak versus weak. People diversifying into the euro because it's just the less bad. You know what I mean? And I think that's the reason. It's the total weak versus weak scenario right now. And a stalemate in central banking policy. That's the long-winded answer. All right, so let's talk about pivots here for a quick minute, considering this is what we all came here for. So pivot points were designed principally for the S&P pits. All right, people shouting at each other, hey, better, 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 hey, better, better, better. And a lot of confusion down there, a lot of people spitting on each other, a lot of people clawing each other with their fangs and, brass knuckles and things being thrown. So they needed some reference point as to where they were trading for that day. Okay? And so they came out with pivot point calculations, and I'm not going to get into necessarily the nitty-gritty of how they calculated. There's plenty of that information on the interweb. All right? The bottom line is as follows. Okay, pivots can be calculated for any time frame that you want, right? So you can have hourly pivots, meaning that the pivots are always calculated on the previous range. Okay, so if you're looking at hourly pivots, they literally take the high, the low, the close of the previous hour and divide by 3, and that gives you your central pivot. And then the support pivots are derived from, and resistance pivots are derived from that, okay? Same as the 4-hour, daily, weekly, monthly. All right? And all of these have their own little fractal sort of horizon. I typically use daily and weekly, and we'll take a peek at the monthly. Not to say that these don't work, but they're just a little too granular for my style of trading. Okay? But I watch the daily pivots and the weekly pivots. So daily pivots are the previous day's trading range disseminated for today. All right? So the previous day's high, low, and close divided by 3 gives you your central pivot. All right? And then then we get these resistance pivots, R1, R2, S1, S2. Okay? And then these M pivots, which are simply the R2 and R1 divided by 2 will give you the midpoint pivot points. Any question on that? Do we have any folks that are new to trading and this is confusing? And understand that pivot points are not universally used. And I don't know necessarily if you told me, guys, very quiet. If you told me, David, can pick one indicator in this world that you would like to trade with, I don't know whether it would be pivots. What do you mean here? I don't know necessarily whether it would be pivots, but I think that they're a nice complementary guide. Okay? I don't know. Some folks, this is their whole methodology. Brilliant. And like I've said to you before, if you are a pivot expert and pivots make sense to you, become a pivot expert. If you are a moving average guru, become a moving average guru, meaning that you know absolutely everything about how the market interacts with moving averages. All right. I tend to be more of a just straight support and resistance type of guy, meaning I just like to look at visual levels and then sort of interpret price action and fundamentals around that. Okay, but pivots are a nice complement to that. Okay, now here's the key thing that I'd like you to take from this webinar today. All right. If you are the number one rule for buying and selling, and really I'm going to call it psychology of the market, is what? And it's the oldest rule. It's the oldest trick. It's the oldest number one saying in investing. What is it? Anyone? Buy low, sell high. That's it. BLSH. Yes. Buy low, sell high. Okay? And pivots are a pretty good way of determining where those numbers are. Okay? So you'll notice on this chart that I have this little red area highlighted, and this is the zone between M4 and R2. And I have this little green area highlighted, which is the zone between M1 and S2. Okay, and these are essentially the reversal zones for the day. Now you've got to remember something with pivots, is that they are calculated relative to the previous day's trading range, relative to the previous week's trading range. Yeah, or you can send me an email and I'll email it to you gladly. So, meaning that if the previous day's range is massive, you're going to have massive pivots. All right, and if the previous week's range is massive, you're going to have massive pivots. And said differently, if it's tiny, you're going to have very compacted, tiny pivots for the next day. In which case, if the pivots are hugely spread out, you might actually have to use more like R1 and S1 as your high and lows. Okay, and that's a discretionary call, but it's something to keep an eye on. All right, now, the important thing I want to talk about is this. Our happy zones for trading are here, here, and I'll highlight it with yellow, here. Okay, meaning this. This is high, this is low, and this is sort of the trampoline springboard here around the central pivot. Okay? Everything else in between here, guys, okay? All this green framed area is neutral ground. Right. Now, if you start the day, week, in our blue area, actually for the benefit of this, we will change it to red. Okay. If you sound check, you guys hear me? All right. If you start the day, week, in this red box, typically the price action will be down. Okay. And if you start the day in the blue box, typically the price action will be up. Okay. And if you start the day in the yellow zone, okay, typically the price action would be where prices come from. So if prices come down to that pivot, chances are that your session direction is going to be the other way, up. And if prices come from the bottom to that zone, from the bottom to that zone, chances are direction for your session is going to be down. Does this make sense to everybody? It's just general rules. Okay, it's a pretty standard technology there. Okay, now, the interesting thing is more these green boxed areas, these neutral zones. S1, between sort of S1 and M2 and R1, I'm sorry, M4 and like M3 here, and M1 and M2, sorry. All right, these zones, this is where it gets interesting. All right, but it's much more simple if we're in sort of this zone, and this zone. Okay, then you should look to trade in these directions that I'm out. So what I was saying here is as follows. Yes. What I was saying here is as follows, is that this neutral zone here, when we start our day, and I'm talking about London session, New York session, Asian session, when we are at these sort of S1, R1 areas, you're not necessarily at a reversal point, but you're also not really at a zone where people want to sustainably buy or sell. Okay? So a lot of times, so if I'll give you an example, let's say Asia kicks price, or we start out Asia in this sort of zone. Run around sort of 93 and R1. What is the likely scenario? The likely scenario is we're either going to come down to this 92.70 and continue up, or we like to push up to 93.30, 93.40, and then come back down to 92.70. So really the trade plan then becomes, great, I'm going to short stuff up here. And I'm potentially going to buy stuff that looks like this. You know, a little long. All right. Then, you know, that's a rough look at a trade plan purely based on pivots. You know, then you can go to your chart, in this case, the Aussie, and say, does that make sense? So now you have two levels in mind. Okay, we had two levels in mind. We'll just shuffle this to the right. One was 92.72, and the other was 93.30. Okay, purely based on the central pivot and the reversal pivot areas. It also happens that this week's weekly central pivot is at 92.99. That's something to think about too. Stands to reason that it'll be at least resistance for a short period. Okay, so let's look at this Aussie chart and think about this for a minute. Little trend line coming up there. Definitely some support through here, which price is clearly bouncing off of, right? So what I'm doing is I'm going on my chart and I'm finding things to filter out this pivot idea that we generated. Okay, because the pivot idea is a 93.40 short or a 92.70 long. Okay, that's what pivots have told us. This is what pivots have told us, right, as our trade plan. So now we're going on our chart and we're trying to figure out, does that make any sense? Okay, so daily coming off support, but what I think is more significant is rather the fact that it's coming off this resistance. Okay, so what is, coming off this amount of resistance, even you can notice that these candles here rejected how much? Basically, back to this level here looks significant. And when we hit this level, price immediately dropped that much. So we'll measure that roughly. 93.50, 91.30, 220 pips. Get off our weekly here a minute. The other thing to realize is resistance here on the short term at 93.20-ish. Am I right? So we know that we have good support here at 92.18. We know we're coming up massive daily resistance. And we know just visually looking at these candles, 1, 2, 3, 4, 5, 6, at this 93.20 zone is significant. Okay. Now, let's go to our 4-hour. On the 4-hour chart, stochastics just turning to the upside, and on the hourly, on the up. So I would venture to say that we have a little bit more upside here. Would you go along with that? but this doesn't look like a great place to put on a long at all. Okay? So what about a trade plan that looks something like this? We know that this is our pivot resistance through here. Okay, and for argument's sake here, because this is where we're sitting at, but we know that already. What about something like this? Kind of hit this, respect it. Push up 93 is the weekly central pivot. Okay, because we got this 4-hour, the next candle, you got to figure it's going to look like this, which is divergence pointed up, which tells us we probably have another 20 hours of upside. Okay. So what about trying to let it sort of break this, go to sort of 92.90, return back to about 92.70, which is today's central pivot. A little long, which also happens to be this support. And then try to trade it up towards this 93.40 zone. And then at this point, we'd like you to see a drop like this. And a continuation up to the next zone. So you could have said to yourself, well, there's two things going on, right? And guys, do you see how these levels are determined? It's nothing more than our pivot points that we worked out that are in front of us, right? We know those values. And then two, just visual, right? Just visual. We can just see that this is resistance. We can just see that this is support. We can just see that this is support. And then you take into account that this is a huge daily level up here that we're coming off of. So my question to you is, what do you think is going to happen in this big fat red zone up here? Chances are this is the start of something fairly significant to the downside. Substantial sell-off. And it also so happens that this red zone is the weekly pivot. 94.25 is R2. 93.86 is weekly M4. That is right in the middle of the weekly reversal pivot point zone. Slap bang in the middle. So chances are we're going to step our way up there and then roll right off that. So I would, with very good confidence, look to sell something for a couple hundred pips at least, if not more, closer to 300, because we took that previous measurement, off sort of the 94.30 zone. But it's very logical that we can spot trade our way up there. Principally, you know, a little long somewhere in the area of this 92.60 zone. And then, you know, if you were so inclined, it'll scalp short, but I'm not sure it's really worth it. 40 pips max or quite a lot of risk. You know, it's kind of a 1-to-1 risk reward. And then a significant long again. This is the weekly central pivot here. So weekly central pivot up to weekly reversal zone, as well as pivot area for a very significant sell-off. And that, of course, will probably take Euro Aussie up a little bit from somewhere around sort of the 47.20 area. You can look at those numbers. You know, you can filter those numbers down for yourself. All right, does this kind of make sense? So all we've done, you know, here it is here. I'll zoom out a little bit. So here, Aussie pivots here on the side. You know, so our levels that we're talking about were something like this. Okay. this bounce here would be this central pivot. You're going to bear in mind that this central pivot will change in a couple of hours anyway with the new day, but then the hourly would look like such. Okay, which will take us to that resistance, which is nothing more than this area. Retest of the psych level at 93, which there happens to be the weekly central pivot and visual area, as well as the psych zone. Yeah, new day, calculate yesterday's day or today's range. It's only later on, Peter, but it's, we're getting towards the end of the given life of our pivots here. Okay, back to our central pivot, which is honestly this. If we go up here more towards sort of the 93 level, our central pivot will probably be close to the same today. Okay, and then we'd like to just sort of push up towards this zone, like this. And notice our 4 hour just starting to push up, and then off there and down, right? Like this. Because you got to, Tokyo Open, 8 a.m. Tokyo. Because you got to figure that this here is the significant direction of the Aussie right now. Everything else is noise in between. Because if you look at this weekly, and I show you a level like this, it's likely, right, that a level of that significance would not necessarily a reversal, but a significant drop. So, at least a touch of this sort of zone, that's around 91.20, so something like this. Right? This is still an up chart, despite it turning down. That's not necessarily a bearish stochastic. So, but you've got to give this area some respect. So for it to drop off here and then come down to the major support and then nudge back up into that zone, that's very typical price action. Makes sense? Hence I've come out with these two sort of red zone values at bounce points. So really the trade plan then would be 93, 90, and I'm going to give it a larger zone to 94.20. Short. Down to 91.40. We'll call it 91.40. We'll call it 91.40, 91.60 area to be safe. Okay, and then this long here, although it's significant, I'm not sure I necessarily want to get it that involved with it on nothing more than sort of an intraday basis. I would then look, so that's trade number 1. I would then look again in a couple of weeks for trade number 2, which would be 95.20 to 50, looking for 90 cents, basically. Does this make sense? And this is, this is using a lower high on a daily basis, and this would be using the resistance on a weekly basis. And you can use some 4-hour price action there to sort of help you time that rollover. But all this trading here was done with pivots complementing the program. Not necessarily giving us the trade plan, but complementing what the price action and the support and resistance is telling us. It's just another layer for us to lean on. It's another layer of resistance that somebody else is going to be looking at. It's the same as if I get rid of this, if we pull up an Aussie chart here real quick, another one. Yeah. A resistance level of that significance would likely give us a major fib drop, or we can calculate where that level is by pulling a, Fibonacci study. And, and behold, 9150 sits at that same level that we talked about as a downside target. So. And then, then we could anticipate a fib of this whole drop. All right. Does this make sense? So what I was meaning, the reason why I dragged out the pivot, the reason why I dragged out the fib study here is simply, I like overlap in the market. Pivots are a beautiful way to determine what is high and what's low and what's sort of in between. Okay, they're a good way to determine what, where significant bounce points / turning points are. And they're one of the few technical indicators that's a leading indicator, meaning that they come on the chart a day before price is even there. So you can look at them, and this is what their intended use was for. You can look at them and say, well, that is where they're telling me that we could see a significant change. Right? And I'll give you an example which will seem like hindsight, but myself and my trading partner have been talking about 42.20 to 42.30 as a rollover point in the euro yen. Why? That's not by accident. Right here was the today's trade plan on euro yen 4 hour. It'll bounce down to 42, cruises up to about 42.40, and then drops. And we are kind of sitting right around here right now. All right, and what's that based on? Pivot points, big clue. You with me? And guys, incidentally, this is the way that I like to do my trade planning, is to literally draw it out how I think it's going to go. Because if it starts to follow this pattern, it makes life a lot easier. Right, so let's look at another one for today. And obviously, you can't anticipate the volatility necessarily. Right, so here was... Okay, so here was yesterday's S&Ps. And I'm doing this for a reason. Because I'm going to show you today's S&Ps. Here's today's euro guesstimate, right? Little double top around the 38.80 and then down. And so we're getting a little bounce here at 38.30, and then hopefully we break that and visit 37.70. Nothing more significant there, but once again, what's the big heads up there? Well, one, we know that 38.80 is resistance, but look at we were on pivots here too. Make sense? It is phenomenal how many times you'll see these pivots line up with the areas of resistance. Okay? What I'm trying to demonstrate to you is how you can use them in foresight to build plans ahead of time. Okay, so here's S&P. This was yesterday. Drag this puppy across. Okay, so this was yesterday. We had us kind of cruising up here to 1866, dropping down to 1844, and then coming right back to where it started from. Well, now we kind of broken marginally above that. So what's today's plan? Well, a little bit of a bounce back up towards 1875. We haven't quite got there. I think we printed 74 and then fight our way down again. All right. That was based more on this, not necessarily pivots. But the principle of that play is resistance. So what I'm trying to articulate to you guys is that you can take these resistance levels, overlap them with pivots, take the underlying sort of fundamental bias you have, and you can build trade plans using those 2.5 things, or 3 things if you want to, 2 technical things, 1 fundamental thing. Does this make sense? And really have a pretty powerful trading strategy just with those 2 things. And they're not difficult, right? Anybody can look at this chart. Anyone can look at this chart and say, that's resistance. That's the next level. This is support. That's support. Anybody can do that. Then anybody can go to a pivot point and say, where is the overlap? Anybody can do that. That's not difficult. And then you can see where those levels overlap. And then you use those overlaps as zones by which you want to trade from. Okay? It could really, it's pretty simple, isn't it? In its conceptually. Thanks, man. All right, and that's all I have for you guys. Any more last minute questions? Otherwise, I will leave you to it. Thank you for attending this session. I hope you got a little something out of it. It's not the most advanced stuff, but I don't think technical analysis is particularly complicated. And I apologize for the little glitch in the sound. I think that was my interweb that went out momentarily. All right, guys, have a super day further, and we'll catch up with you on the next go around. Thanks.